Welcome to the Motor Carriers Insurance Education Foundation series of in-depth review of coverage addressing the unique operation of a motor carrier. This session we'll be talking about who is our insured. These webinars are not filed for state CE credit and is a learning opportunity only. If you need state CE credit, please contact our office as we provide 12 hours of state CE credits every year, including ethics. If you have any questions, please send us an email at trs@mcief.org, and we will answer those questions and share our answers with everybody, and all the members. Let's look at the policy wording. The lead-in policy for the commercial auto, whether it's a business auto policy or the motor carriers form, says various provisions in this policy restrict coverage. Read the entire policy carefully to determine rights, duties, and what is and is not covered. Obviously, this is telling the insured to do this. We all know that most insurers don't do this. In fact, we even have some concerns about our insured doing this because they might call us up and ask us questions we don't know answers about. But at least we're asking them in the face of the policy to introduction to the policy to read it carefully. And understanding it's a whole different world. This is why the CE's there and all, but this is kind of a be nice situation that really doesn't help us in most court cases. It's more how the retail agent and insurance carrier communicates the provisions of the policy that are important, that will end up being a concern if there's some questions about coverage. It also goes on and says, throughout the policy, the words you and your refer to the named insured shown in the declaration. Notice it doesn't say the first named insured, it says the named insured shown in the declaration. That is the insured's either business and or individual there. The words we, us, and our refer to the companies providing the insurance coverage, providing the insurance. This is our insurance company. Other words and phrases appear in quotation marks, have special meaning, and you find those in the back of the policies, either Section 5 in the business auto or Section 6 in the motor carriers form. We look at the name insured. Any legal entity listed on the name insured line, which is item 1 of the declaration, will be considered you or your later. We have the 4 entities that are typical how our businesses are set up: corporations, partnerships, individuals, or limited liability companies. Others would be a organization like not-for-profit or a legal organization or a few things, or a condo association, a couple things like that. But the 4 are the main ones that we have here. And these are any legal entity listed in item 1 of the deck will be a you later. So any and all legal entities listed in item 1 of the declaration will be considered a you. Only list the entities whose legal assets will be exposed in a suit or claim. This is what we want to do for liability purposes. So we want to only have, because what we're protecting the insured from is able to someone to sue them and take their assets away. So the owner of those assets, the entity that has those assets, who should be the entity listed in item 1 of the declaration. You want to make sure that by the tax ID number is correct. This is where we start, because the tax ID number of the individual or the businesses or the corporation or LLC or partnership listed in item 1 will be whose assets will be exposed. You want to check the state records to see if the entity is properly listed and is active. Every corporation, LLC, and some cases partnerships, depending on the state, or the trade names and the DBAs, depending on if they're individual or not, has to register with the state and pay a fee every year to be active. This also will show us who, in a lot of cases, is the representative of those areas. Those can be found by the Secretary of State and the states that the entity is domiciled in. The business motor carriers name insured whose assets are exposed to loss when a crash happens. That's what we're dealing with. Understand how the motor carrier business is set up and make sure item 1 has the right named insured, meaning the owner of those assets. The you in the policy will be protected by the policy. This is the business. All others get protection from the who's insured provision in the policy. So we want to know who owns who owns the business or who owns autos being insured by endorsement. So though we don't worry about who owns the business, never don't put their name on the name insured line, or if the vehicle is owned by an individual, we do not want to put them on the name insured line. We'll handle that by endorsement. We have the four entities have proprietorship. Tommy Ruke doing business as Ruke Trucking. The thing that most people don't understand is the legal entity there is Tommy Ruke. The DBA does not limit exposure or change exposure. It would that part. So it's an individual. One of the concerns I have in this is that why would somebody today still operate a motor carrier's business as an individual? You might have a lot of people who are listening to us who are still a proprietor because they got one truck or so that because they don't want to go to the step. But you got to tell them what you're doing is exposing all your personal assets on that missile that weighs 80,000 pounds running around down the highway with a skull and crossbones on their grill that lawyers love to sue. Do you need to put an entity that at least protects the personal asset? So be very careful if there's still a proprietorship. That's the concern that I have here, and then hopefully we'll talk them out of being proprietorship. Proprietors, individuals are a concern because of the possible personal exposure brought under the coverage. Other than individuals, no need to name the owners of the business on the named insured line, item 1. This is protection for exposure for the owner of the business already in the form. So what we're saying here is no entity, no individual should be listed on the named insured line, item 1 of the declaration, unless it is a proprietorship, and we want to talk them out of that. You don't want to name any owner of the business and or owner of the vehicles on the declaration. Partnerships. Tommy Ruke and Joe Blow doing business as T&J Trucking. Who is the first name insured there? It would be Tommy Ruke in those cases. Obligation on the form to deal with the first name insured, if you're a partnership, says we have to send notice of cancellation, collect premium, and take policy changes from the first legal entity named on the named insured line. In this case, it would be Tommy Ruke. How many legal entities we have here? We have 3. We have Tommy Ruke, Joe Blow, and Ruke Transportation, or excuse me, T&J Transportation, a partnership. How do we know if the partnership is a legal partnership? If it has a separate tax ID number, meaning going back to the tax ID number of the entity we're insuring. So you don't want to list that there, because if you list that, now we have 2 individuals on the name insured line plus the partner, plus the partnership. So all you want to list here is the partnership. The owners of the partnership, Tommy Ruke and Joe Blow, are going to be covered already in the who's insured provision without naming them here. By naming them here, you just confuse things. Organization, that would be Ruke Inc. LLC would be Ruke LLC. Those are the best setup because now that's the legal entity itself. You have no personal exposure if everything in the business is handled properly, meaning funds and such like that, that you have to talk to the lawyers and CPA how to set those things up. But that's the entities you want, and the most preferred entity would be an organization, which in most cases would be a corporation or an LLC, because there that is the legal entities who own the assets, and they will have separate tax ID numbers. So you want to take time to find out who the U is and how the U has set themselves up to do business. There's no need, again, to name an individual on the deck sheet because of their ownership of the business. The form already provides coverage. Saves a lot of problems later and some E&O possibilities if we aren't verifying who owns the assets, who we're trying to protect, again, making sure that they're registered with the state and the organization is active. The second thing is limited. What we have in problem here is that we cover all the vehicles the insured has if they're legally liable and it's a covered auto. The only way we can limit the exposures, meaning the personal exposures that we don't. One of the things that I have a concern with is I do not want to provide personal auto coverages on a commercial policy. It never benefits anybody. The insured might say it does, but it really does not. Because if you're a trucker the problem that you have a motor carrier, those big trucks carry premium, what, $12,000 to $20,000 a year, where personal auto premium is about $2,000 a year. That's a real short savings, because if that vehicle is being used personally and has a crash and it's insured by the business, then that vehicle, that loss will go against the business and affect their business cost of insurance for years there. So you don't want any personal exposure on the policy. So the way you would do that is you would have specified autos. That's the most common one we write, and that would be 7 and 67. If there's a PPA listed, personal vehicle listed, then that's personal exposure. You want to suggest not to list those personal vehicles. Now, again, we're not talking about any time you have an individual or the corporation, same thing. You want to insure those somewhere else. For example, one point in time in my career, I had a legal entity that I did consulting work with. That legal entity owned a vehicle. I had my personal auto policy cover that vehicle with the additional insured lessor endorsement on the policy, and that satisfied my requirements for umbrella and satisfies my usage of that vehicle for both personal use and business use, but it's not on my commercial policy. It was on my personal policy. The policy setup. The problem you have here is if you have individual, then you have any auto hired. Specified autos, we can take the personal vehicles off and we have no problem. But if we have any or hired, the problem is those vehicles we don't know about. So if any have 1 or 61 hired, 8 or 69, the individual listed on the item 1, Tom and Ruke doing business as Ruke Trucking, or Tom and Joe doing business as J&T Trucking. Both of these situations, you have a legal entity named on the named insured line, and you have hired auto exposure, either because you have an any or you have a symbol 8 hired auto. So we have individual name insured line. I rent a moped. The example I use in teaching the face-to-face, as some of you might have heard, is that Joe and I are on vacation in Key West. We rent a moped. We take the moped down to Front Street to frequent a place that Hemingway used to frequent called the Garden Eden. We have a couple cases of beer each. We come back downstairs. We take our moped back to our hotel because we're too drunk to walk. And Joe loses control of the moped and knocks an individual sitting on the wharf, old man, into the sea. That's the old man in the sea case. The question I would just ask, now remember the setup of the policy is you have Joe and Tommy's named on the named insured line, and you have hired auto coverage. Was that a hired auto by Joe? Yes. Was their name on named insured line? Are they a you? Yes. Now the question is, even though it was personal use, we still have hired a vehicle with the name insured line because the symbols does not exclude that part of it. So would their personal auto policy respond? The answer to that question is no. Why? Because it only had 2 wheels. To qualify as a covered auto on a personal policy, it must have 4 wheels. But it does, but then this auto policy and the motor carriers form does not have a wheel requirement. It just is a land motorized vehicle. So we would have to address that claim under this policy. Now that's a far-fetched. I should give that example so you remember. But one of the things that some of you like to do, or know that I like to do, is go skiing. In fact, and when I go skiing, I rent a vehicle, and we hope there's ice and snow on the road, on the slopes, and therefore the ice and snow on the road. And you remember, I'm from Florida, driving this vehicle with snow involved in it. Now we have the same setup. We have Tom and Joe doing business as T&J Trucking, a partnership. We have hired auto coverage, either because we have any auto or we have a hired auto symbol. Now we have coverage. Now do we have coverage on my personal vehicle policy? Yes, but do we still have coverage on the commercial policy? The answer to that question is just same answer as moped. Yes, because it was a hired auto that was leased, rented, or borrowed by an insured, since my name was on the name insured line. Then the question I ask people, who pays first? Most of the time, the answer is the personal auto policy. That's wrong. They don't pay first because both of them act as excess because they're not on autos, and both of them are excess both in the commercial policy and the personal policy, so therefore it's a pro rata. Most of the personal auto carriers do not understand that. A lot of lawyers don't understand that, and clearly insurers don't understand that. This is the exposure that you have if you have an individual on the name insured line and you have hired auto or any auto. You can't control those. Again, you only control the personal exposure by symbols. We can do that with specified, but not these other areas. So again, why would any person own an 18-wheeler in their personal name? They risk all their personal assets. Never offer any hired auto, any or hired auto if an individual is listed on item 1. You can also modify that if it's an individual by using the symbol individual symbol change CA 9954, which now you could have on the name insured line a symbol any auto 10,000 GVW or larger, or only those autos you lease, hire, rent, or borrow 10,000 GVW or larger. So what we're saying here, if you have any individual on name insured line, you want to take that name off. If it's a partnership, all you want is a partnership. You don't want the owners of the LLC. You don't want the owners of the corporation. If it's an individual, you want to talk it out of it. But if there's an individual on the name insured line, you do not want to offer any auto or hired auto. You want to limit it to just the commercial vehicles, and those are vehicles 10,000 GVW or larger, both for any or also for hired. The second consideration is who the government gives permission to operate on the highway. That's the name of the DOT is in. You haul any property in interstate commerce, you have to have an MCS 90 attached to the policy. If your name has if your insured has an MC number in it, then they haul processed goods. There could be a difference in those names. In fact, there are. This is one of the problems in consolidating or getting rid of the DOT number, MC number, which was supposed to be done in 1998, which still hasn't been done. This is unified registration system to get rid of MC number because they don't allow DBAs in the MC, they do in the DOT number. So there could be a difference in the name insured on the policy. So we have to be careful about that too, to make sure those match up. So if you have a filing, 91X or Form E filing, those are the state filings, must be in the name the insured gave the government. That's what has to match. Could it be different than the tax ID number? Tommy Ruke doing business as Ruke Inc. That's what the government knows them about. You do not, though, want to put Tommy Ruke on the name insured line. This is the 91X filing potential. All you'd want on the name insured line is Ruke Inc. But for the 91X filing to complete their ability to use their MC number authority, you would have to give them Tommy Ruke doing business as Ruke Inc. Now, I don't think we've increased our exposure here because Ruke Inc. owns the vehicles, and Tommy Ruke would be covered, or Tom Ruke would be covered as the policy for the use of those vehicles because he owns the legal entity. But this is where we have a difference. You have to match the concern of what the insured told the government this area, and this happens hopefully not as often as it could. You want to talk them into doing it right, but as we know, our insureds have got different impressions and don't do everything right all the time. So you want to help the insured understand to be careful when setting up their business so that the personal or other assets are not exposed when and if a crash happens. That's the bottom line here. The next thing we move now that we've satisfied and talking about the importance of the U is insured means any person or organization who qualify as an insured in the who is an insured provision of the applicable policy, except with respect to the limits of insurance. The coverage afforded applies separately to each insured who is seeking coverage or against whom a claim or suit is brought. So when we look at who's going to be protecting the policy, it starts with this definition: any personal organization qualifying as insured in the who's insured provision. So we have the two insurance provisions that we show you here. And these are the three entities that qualify as a who's insured. Business auto, motor carriers form. Who is an insured? The following are insureds. The U, again, the U, going back to our original talking in the introduction area, the U is any legal entity on the name insured line. This is why you want to keep the individual names off. This is why you want to limit it just to the business. Again, it needs to be a covered auto. So this is again why it has to be a covered auto. If it's specified, then there's no problem with it if we don't put any personal vehicles on a specified. But if it's any or hired, we do have that problem because it qualifies then as a covered auto if you have an individual name on the name insured line, even though they're using those vehicles personally, you have that exposure. Anyone else, while using with your permission a covered auto you own, hire, or borrow, again, that is the driver in those cases. That would be involved. So these are the ones that we already have covered as we talk here. Again, we go back to what's important. The U, that's any legal entity on the named insured line, qualifies insured, meaning you get full protection of the policy, whose assets will be protected. He'll get defense and be paid on their behalf. Anyone else, those are the driver, anyone that they loan the vehicle to, like loan the trailers, will qualify as a permissive user of that covered auto and will be protected under the policy just like their names on the name insured line. Then the form adds people who are not insured. And the key part here under 1, 2, and 5, those are owners of non-owned covered autos. I know you take time reading here, but what we're saying is the U is covered, but not the owner of the vehicle is covered. So you have to also drill down who owns those vehicles. If it's an individual, then that would be covered in those areas. But if it's a leasing company, if it's a person who owns the individual personally, even though they own a corporation, they own the LLC, they own the partnership, they would not be covered personally for those vehicles unless there's an endorsement of the policy covering them. In the motor carriers form, we also take coverage away from the employee, driver, or owner, or anyone else from whom you hire or borrow an employee. Again, the owner or any employee. The reason here is that the business auto policy, if I have an individual and it's and I'm covered as an individual on the policy, then I would be an owner and I would not have coverage under business auto policy, but I'm for ownership, but I might have coverage under permissive user provision. That takes it away in the motor carriers form. So any owner, personally vehicle. This is what people don't understand. Even if they own the vehicle personally and the corporation, LLC, or partnership is insuring it, the partnership, the LLC, the corporation has coverage, but not the owner of that vehicle, even though they still own the partnership, LLC, or corporation. That's what is hard to understand and hard to explain. If there's employee, we understand that, or if it's a leasing company, those would be named on the policy too. Would have to be covered on those policies. But the one that we end up with the most problems is if it's owned personally by the owner of the legal entity. They don't understand, they don't have automatic coverage. Then we add a third entity that qualifies. Anyone liable for the contact of insured described above, but only to the extent of that liability. Both the forms end up having that wording in the who's insured provision. And so we have that automatically covered in that, and that is the blanket additional insured. So recapping who qualifies as insured already. All three forms, the business auto policy, the motor carriers coverage form, and the truckers policy, which is no longer supported by ISO, there's only a couple carriers, insurance carriers, who are using those still today. The U, that's the legal entity named on the deck sheet, or any legal entity. Anyone else who has permission from the U is also covered. That's the driver in most cases, or anyone who the insured loans a trailer to would be a permissive user. And then the C and E, anyone liable for the conduct of the insured above. That would be your customers or the owners of the legal entity. That is the insured. Anyone from that can be held vicariously liable is already covered. And if you want to get more detail here, go to our website and review the white paper, broker and shipper, the insurance sugar pill at the MCIEF.org. And we'll explain how this disinsured and how the coverage that's already afforded in the form is blanket disinsured and covers the customers already without naming them on any other endorsement. But the difference is how the owners of non-owned covered autos are provided protection. Owners of non-owned covered auto, the business auto policy, all owners of non-owned covered auto, not an insured without an endorsement. So that is the CA 9947 employee as lessor endorsement that you'd want to add. And that's what we have. So it's up to us to ask who owns those vehicles so we know to add those endorsements as an agent. The motor carriers form, all owners of non-owned covered auto plus the employee agent are not insured without an endorsement. However, under circumstances, the written contract in the motor carriers form provides coverage for the owners of trailers and power units. So when non-owned auto coverage is being used by a motor carrier, when a non-owned covered auto is being used by a motor carrier, then the owner could become an insured on the motor carrier's auto insurance policy when the motor carrier is using the non-owned auto under the MCIEF under a written agreement. And again, what we're talking about here is owner operators. And you cannot let, the insured cannot let someone use their authority without a written agreement. That's FMCSA regs and rules. But let's talk about back to most of the policies that you have, and this is item 3 of the policy where you list it if you use the specified autos. This is schedule of covered autos you own. The key part that people forget here is we only can schedule here the autos that the insured owns. And I think in a lot of cases, retail agents do not do a good job, and sometimes even insurance companies do not do a good enough job finding out who owns it. It's going to be owned by either 3 things, 4 entities. The legal entity will name insured line, LLC, corporation, or partnership. Those are legal entities. They have tax ID numbers. This vehicle is an asset that they own. Those are the ones that we worry about covering them if that vehicle that they own gets involved in a crash, because now, since it's owned by a legal entity, those assets of that legal entity are exposed with the crash that was caused by a vehicle that it was owned. Second could be the owner of the corporation owns it personally. Why would this happen? Well, again, I just have preached or talked a couple times about why would somebody act as an individual. And I encourage you to change the operations from an individual to a corporation, LLC, probably an LLC. That's the easiest and simplest way to do that. Is no tax ramification. But in this case, they already had the vehicle financed. So therefore, they still own it in their personal name, even though now they're operating it as an LLC. Then that's a problem you have to worry about, because most of them don't understand that they have no coverage. The other one would be if you have a finance leasing company. Finance leasing company would be PACCAR, would be a Ryder or one of those. And most of those cases, they would require an additional insured endorsement to be added to the policy. And the other one could be an owner operator. And so the owner operator would be listed in the policy. Again, if there's not, that owner operator vehicle is not used by the, not owned by the legal entity, again, because they're an owner operator. Yet the owner operator expects coverage under the policy as long as that vehicle is being used on behalf of the motor carrier. And we have to add an endorsement. The 3 endorsements we have to add is CA 9916. That's the one you want to add when you have owner operator individual or independent contractor. That's when the owner operator owns the vehicle itself. You want to add CA 9916. That now converts the vehicle from a non-owned auto to an owned auto and covers the owner of that vehicle, again, owner operator, as long as they're still leased to your motor carrier and the vehicle is being used by that motor carrier. If it's a leasing company, that's a PACCAR and Ryder. They want CA 201. That's disinsured lessor and loss payee. This then would cover them when they're being held vicariously liable for the actions of the insured. And more important to them is their name's going to be on, if you have physical damage in the policy, on the check. The CA 9947, this is the one that we forget to use often. The other 2 we typically remember to do because we know about the owner operators. Our insurance companies drill down about that. And we know about the leasing companies because they force us to send certificates to complete the process of that lease. However, in 9947, you ask insured who owns that vehicle, and it's a small LLC, if it's an LLC with 2 or 3 trucks, they might say, I do. You got to ask them what they mean, because in this case, it's either the business I or individual I. This is the thing we have, because again, a misunderstanding is they think they have coverage just because they own that vehicle and also own the legal entity. They have coverage. They do not without 9947. Then we also monitor the autos being inspected. This is underwriting because in most cases we have specified autos and we want to make sure they're listed on the policy for our premium sake. So if unreported vehicles are inspected, meaning not listed on the policy and our insurance DOT number, then we want to know why as an insurance provider, because now your insured is using the vehicle. Even the hired auto, we want the premium for that because we can't rely on the hired auto premium for these vehicles that used under the insurance DOT number that we might have and probably do have a primary exposure for coverage. The insured uses an auto not listed on the policy and the insurance provider does not know about it will typically be the owner-operated independent contractor leased units. Those are the ones that we'd be concerned about. And that would be covered in a hired auto or any auto. So general liability also has the same concern, setting it up. The U, same consideration, entity listed on the deck. Who qualifies in the who is an insured provision? We have the same exposure here. We're worried about a personal activities being addressed by our policy when we end up only wanting to insure the trucking entities. So let's look at an insured situation where on a general liability, the name insured on the policy is Tommy Ruke doing business as Tommy's Trucking. As we said in auto liability, the legal entity there is Tommy Ruke. The DBA has no limitation or expansion of coverage. So the legal entity is Tommy Ruke. So now let's look at the wording in the general liability who's insured provision and compare that with what we found in the auto liability. General liability, name insured, Tommy Ruke, doing business as Tommy's Trucking. Tom has a son. Tom buys a lawnmower, and on the weekend, he and his son mow yards. Tom bills in the name of Tom's Lawn Mowing, Tommy Ruke, DBA. When in doing so, mowing the yards on the weekend, the rock kicks up and damaged someone's eyes. Will the general liability policy covering Tommy's Trucking address the damage done by the rock while mowing the yards for Tommy's other business, Tommy's Lawn Mowing? Yes, because Tommy is an individual, and this again emphasizes the personal exposure for individuals as we did in the auto liability policy. Because the general liability policy reads this. This is a who's insured. Just like the auto liability, anyone who qualifies under the who's insured provision will have protection in the policy. They will have their obligation paid if they're legally liable, pay on the behalf of it and provide defense. If you, again, you is any legal entity on named insured line. So that would be Tommy Ruke doing business as Tommy's Trucking. An individual, you, that's me, that's Tommy personally, and your spouse are insured, but only respect to the conduct of the business of which you are the sole owner. Since I own Tommy Trucking and I own Tommy's Lawn Maintenance, then both of them qualify as an insured under the policy. So therefore, in this case where the lawnmower kicked up the rock and hit the person in the eye, it would be covered under the general liability policy because, again, an individual's on the name insured line. It doesn't limit it to any business. So the only way to limit the exposure on the general liability policy is to add an endorsement. We'll look at a minute as the way to limit the personal exposure on the commercial auto policy is not insuring any personal vehicles controlled by symbols and or make sure the hired auto or any auto coverage is limited to the commercial vehicles 10,000 GVW or larger. But just like we also said in the auto liability coverage, business auto or the motor carriers form, we don't need to name the owners or the managers or the stockholders or directors of any business. Just like in the general liability policy, you have the same consideration. Because if you look at B, C, and D, where we extend coverage here to any partnership, that's Tommy and T and Joe Trucking a partnership. You, T and Joe, Tommy, T and Joe are insured. Your members, your partners, and their spouse is also insured. Even though they're not named on the name insured line, they're covered because they are the partners of the partnership and also includes their spouses. But now we add this, but only respect to the conduct of the partnership. So we don't pick up the personal exposure. A limited liability company, that's the LLC. You, the limited liability company, are an insured. You, your members, that's who owns it, are also insured. Again, but only respect to the limited liability company. No personal exposure, just a limited liability company. Your managers are insured, but only respect to the duties of the managers. Again, no personal exposure. It's limited to the activities of the limited liability company. A organization other than a partnership, joint venture, and limited liability company. Those are your corporations. You, the corporations, are insured. Your executive officers and directors, that's who runs the corporation, are insured. But again, only respect to the duties as your officers or directors, meaning no personal exposure. Your stockholders are also insured, but only respect to their liability as a stockholder. Again, that's who owns it. Again, just to the entity, limited to the activities of the corporation. We also cover the employees here, but also addresses duties in the conduct of your business if you're an employee. That's also covered here. So what we have involved in this is the conduct of any business when you is a sole owner, individual. It also includes spouses. Again, I want to remind you, why would anyone still want to operate as an individual? We talk them out of that, just like we did in the commercial auto. As we though look at the general liability policy and have the commercial auto liability policy, we emphasize again, all others that are not individuals, you do not want to put them on the, don't need to be covered here because they own it or they manage it. Protection is limited to the activities of or behalf of those legal entities. They already who could be named in the suit because we would cover them, but the whose insured provision covers them for owning the legal entity or managing the legal entity, but we take away their personal exposure by adding the general liability policy, by adding the wording, but only respect to the conduct of your business. That's the LLC, partnership, or corporation, or respect to their duties as a manager or a stockholder, officer or director of that corporation, within the scope of their employment if they're employee. So it takes rid of their personal exposure. So all owners and managers are automatically covered and no need to name it on the deck sheet, just like the auto policy. Do not add individuals to the name line unless the insured is an individual, and encourage them to change to LLC and a corporation. What we did in the auto policy by adding the CA 9954, any auto 10,000 GVW or larger, or a hired lease rented to borrow auto 10,000 GVW or larger to get rid of the personal exposure. We do not have that ability in the commercial on the general liability policy, but we do have an endorsement that I encourage you to use to get rid of any exposure other than the trucking entity. This is limitation of coverage to designated premises, project, or operation. Keyword there is operation. This is the CGL endorsement 2344. This is also the April 7, 2017 endorsement, which is better than the older one. The older one did not have the word operation. This is actually a better endorsement now. And what it says here, the premises, again, liability arising on a premise, motor carrier, their address here. And then you want to limit the project or our operation. This is what they're doing. They're operating an interstate motor carriers or as a motor carrier, or then the trucker's classification, which is the general liability classification. So now we're not covering any of the personal exposure. You would not cover the lawn maintenance company that we talked about if their name insured was Tommy Ruke doing business as Tommy's Lawn Trucking and had those separate. We also might want to add that to most other policies, even LLC corporations or partnerships, unless we can make sure that they don't do anything other than that. And until we start looking at their financial statements, we're not assured of that. But as an agent, you need to ask the insured, the owner of that, who you deal with when you set the policies up. It could be the president, it could be the treasurer, whoever you're dealing with. Does this legal entity own anything other than the trucking company? It could be apartment buildings, it could be vacant land, whatever it is. You want to find out if they do those things. Until you do that, you want to limit that exposure. If they're doing other things, then you can talk to the general liability carrier about how to properly underwrite that and properly price that and get the proper premium for it. But you want to limit that exposure just to the trucker classification. So since general liability policies, you have to add this endorsement to do it, where in the commercial auto policies, you would do it by the controlling of the symbols. So take time to make sure the name on the item 1 is the entity that owns the assets. Only list operating entity. There's no concern is when it's an individual or also named on the name insured line, because now you're picking up the personal exposure, and only we limited that by the symbols or by adding those endorsements. So understand who qualifies as insured. It starts with the U. Those are any legal entity listed on the name insured line. It also covers permissive users, those are your drivers, and also covers anyone who else could be held vicariously liable. That's where we cover the owners of the legal entity, because if their owners are named because of the activities of the legal entity they name, they own or they manage, then they are going to be covered because they're being held liable for the actions of those legal entities. And then this auto policy or the motor carriers form and the general liability policy, because of who's insured provision, addresses that and gives them those coverage. You also want to look at the owners of the units listed in item 3. And okay, here those owners are not covered without adding the endorsements, owner operator CA 9917. If the owner of the legal entity owns the vehicle personally and it's the corporation LLC, you want to add 9947, employee as lessor. And if it's in the case of the leasing company that would be forced to, that would be CA 201 for long-term finance leases, and the leasing company want those endorsements to be shown to protect them for that. So again, hope you got something out of this to know more in depth and the importance of setting up the who's insured provision, understanding who the name on the name insured line, item 1. If you have any questions after this, please send an email to trs@mcief.org.